I've made $250,000 in the past 3 months trading just using this one simple breakout strategy. This strategy and concept that I'm about to share with you today has helped me achieve these results and change my trading forever. When I first started trading, I always wondered, how do I catch these real breakouts and these big momentum moves in the market? And in today's video, I'm going to share with you exactly how I'm able to catch these big moves in the markets, and then I'm going to show you real trades that I took in real time. Let's get into it. So as you can see right here, in the past 3 months trading, I've made close to $250,000. Now, as you can see, this is my PnL graph right here, spanning from August the 1st all the way to October the 31st. And as you can see, this is my PnL graph for the last 3 months trading. And majority of this money was made through what I'm about to share with you guys today, which is understanding how to capture these higher time frame moves. And in today's video, the goal is to learn how to catch real breakouts and big momentum moves in the markets. The majority of your P&L is going to be made up of catching these big moves. So if you're able to catch these real breakouts on the higher time frames and have these big momentum moves in the markets, you'll be able to make a lot of money if you're able to capitalize on these opportunities. So let's talk about the higher time frame breakouts, and let's talk about the outline of today's video. So we're going to go over 3 simple steps on how you're able to catch these higher time frame moves. Number 1, talking about higher time frame context, understanding what's going on the higher time frames, and then we're going to ask ourselves, are they true or potential false breakouts? And then we're going to go on to the lower time frame entries and how to manage our position on the lower time frames. And of course, we're going to go through examples to show you guys exact what this will look like in real time. So that being said, let's get right into the video. First things first, have you ever entered into a textbook setup on the lower time frames? As you can see here, we're on the 1-minute chart. We have our 5-minute range high marked out. We drag it over. You can see price ends up having a really solid push towards the upside. We enter in here with some buyers present off your 5-minute range high with a stop just a break below, and we're looking for continuation back towards the upside. And what happens? We enter in the trade only for us to get stopped out. As you can see, we had some nice buyers stepping in, ultimately no confirmation, and we end up getting stopped out of our trade. Then what happens? Price ends up heading higher the rest of the day. So we had that nice 5-minute range retest, we had a nice thesis towards the upside, and ultimately we end up getting stopped out, and then price ends up heading higher the rest of the day. And then you tell yourself, how did I miss out on this great opportunity? I had the right thesis, I had the right entry, but ultimately, right, I wasn't able to hold. Either I had too tight of a stop, I wasn't able to understand the higher time frames, and ultimately I missed out on this great opportunity and I lost money even though I was right coming into the day. And this is one of the most frustrating parts when it comes to trading, is being right and you not making money, because in your mind you think if you're right, you're automatically going to make money, but that's not necessarily the case when it comes to trading. And one of the main reasons why this is the case is because we're not trading with the trend. If you trade with the trend and you're aligned with the higher time frames, it's going to be a lot easier to trade on the lower time frames, right? You're going to be able to capture these higher time frame moves because in the back of your mind, right, we're trading with the trend, and it's a lot easier to trade with the trend than to trade against the trend. One of the best quotes when it comes to trading is just trading with the trend, right? The trend is your friend. There's no reason to go against the trend, because ultimately when you go against the trend, it's going to be a lot harder to trade and you're going to lose a lot more. Okay, so when we're talking about trends and trading with the trend, there's a few different time frames that we're going to be looking at. Number 1, these are our lower time frames, right? We have the 1 and we have the 5-minute. I classify these as the lower time frames specifically for entries and managing your positions on the lower time frames. Whenever you take a trade, right, and you want more precision, you can be going on to the 1 and 5-minute. If you want to develop a bias or a narrative, right, we really want to be looking at the 15-minute and the 1-hour chart. These are some of the best time frames to understand the chart and to understand the higher time frames. And then of course we have the daily and weekly chart. We don't use these charts as often, but it's to give us an overall picture of what the market's doing. So if the daily and weekly are trending, that usually means the 1 hour and 15-minute are trending, and we're just going to be looking for clear longs towards the upside. If the daily is consolidating, that's something completely different. So the time frames we're strictly going to be focusing on today to identify our higher time frame breakouts and to capture these momentum moves in the market is going to be on the 15, the 1 hour, and potentially if the daily and weekly have the same setups that I'm about to show you, you want to pay attention to it as well. Because as I always always mention, higher time frames always hold more power. So if we have a weekly base or we have a daily base, right, the bigger the base, the bigger the breakout. If we have a 1 minute base, right, that can easily fail and have fake outs, whereas if you have a daily base, right, that's going to be a lot more powerful. So as you can see right here, what we're going to focus on today is 4 of my favorite higher time frame patterns. And you might have heard these patterns when you first start trading, but I'm going to talk about them not on the lower time frames. I'm going to talk about them on the higher time frames. Number one, what we have is our flat top. In my opinion, this is one of the most bullish higher time frame patterns that we could be looking for continuation. Number 2, cup and handle on the higher time frames as well. Number 3, our classic trend continuation, which is just a break and retest. And then number 4 is our head and shoulders invalidation or fail is one of the most bullish setup when it comes to looking for continuation on the higher time frames. Now let's go on to our first higher time frame pattern, which is the flat top break. Okay, so the first pattern that we're going to talk about is our flat top break. And as I mentioned, we really want to be looking at this on the 1 hour chart, the 15-minute time frame, or the daily chart, preferably anything that's on the higher time frames. And why is the flat top break very bullish, especially looking for a continuation setup? So this is what the flat top break looks like. As you can see, we're essentially building up higher lows and we're creating what's called a flat top. So we have a key level of resistance where price rejects off of, we create higher lows, and then price drives back towards the upside, creating another point of resistance. And then you can see so on and so forth. And as you can see right here, what we create in the markets is a lot of what's called built up liquidity, especially if the markets are making higher lows and we continuing to push higher. It's only a matter of time before we get that break above and we're going to have a very explosive move towards the upside, just based off of market structure, based off understanding the context and logic behind why the flat top is bullish. So if you can identify this pattern specifically, as I mentioned, on the higher time frames, preferably the 1 hour chart and above, that's when you're going to see these big moves occur in the market. And where do we want to be looking for opportunities? We want to be really looking for breakout opportunities. And then on the lower time frames, we want to be capturing this leg in price, or we can be also looking to capture the retest for continuation higher as well. So there's a few different opportunities that we can look to capture based off of this higher time frame chart on the lower time frames. So basically our job as traders is to be able to identify these higher time frame patterns and then use our lower time frame entry models to capture these higher time frame breakouts to catch these real big momentum moves in the market. Now, what does this look like? So as you can see right here, this is Tesla, this is the higher time frames. And what are we doing in this case? As you can see, we have a really strong push towards upside. And now you can see we're essentially building up liquidity. Price continues to push higher and we create what's called this flat top. As you can see right here, we have a clear level of resistance. We have another touch, another touch, another touch here, another touch. Now we're continuing to push higher. As you can see, we're building up higher lows, building up more higher lows, and you can see price is very bullish. So coming into this morning and moving forward, we're going to really be now looking for the break above, and we're going to be looking to capture this leg in price for this continuation higher. And we can expect this move to be fairly big because we've been essentially consolidating, right? Consolidating, building up our higher lows. So once we break above, we can expect a big move in the markets. So coming to market open, we're expecting a big move on Tesla, specifically on this day. And then all we have to do is go on to the lower time frames to capture this higher time frame pattern. So coming into the morning, you can see we're on the Tesla 5-minute chart and we're breaking above a key level with a strong candle close. So within the first 5 minutes of market open, we're getting this really strong drive towards the upside. Now we're above our previous day highs along with our pre-market highs. So just based off of the first 5 minutes, we're fairly bullish. And now we're either going to be looking for the retest off your previous day highs and pre-market highs, or we're just going to be looking for the 5-minute range break for continuation higher. So as I mentioned, there's 2 potential trading opportunities. We have our 5-minute range high marked out. We're going to be either looking for the 5-minute range high break or potential retest off of our previous day highs for continuation higher. So we have 2 potential intraday opportunities to capture this higher time frame thesis. So as you can see right here, now what we're going to do is wait for the 5-minute range high retest with an order block. So now you can see we're on the 1-minute time frame. Price, we have this nice continuation higher. So clearly, right, price is having this big push towards the upside. So now instead of waiting for the retest off our previous day highs, because we don't want to see price now come all the way back down in towards our previous day highs, we much rather wait for Tesla to come back down in towards that 5-minute range high along with this order block here as well. And as you can see right here, price comes all the way back down to that 5-minute range high. You can see what it looks like here on the 5-minute chart as well. Perfect retest off of our 5-minute 5-minute range high. We have our entry as soon as price taps into our order block along with our 5-minute range high with strong price action. We enter in with a candle close with a stop underneath your 5-minute range high. Now we're going to be looking for continuation back towards high of day and above, preferably right a 1 to 2 risk reward ratio, right? We're looking to risk minimum of 1R for 2R. So if we're risking, let's say for example, $100, then we want to be looking for a minimum of $200 reward. So of course we're going to take partials along the ways, but our risk reward, we like to have it as a 1 to 2 opportunity. And as you can see right here, we have a really strong move. Plus we have continuation because of one thing, as I mentioned, which is the higher time frames. We're able to go onto the lower time frames to essentially capture this higher time frame pattern. And that's when the 5-minute range retest or the 1-minute range retest or the order block retest, these are going to be the most higher probability trades when we are able to capture these higher time frame trades in the markets. Number 2, what I have here is the cup and handle. So very similar to the flat top break. So what we have here is a strong trend towards the upside. We create this key pivot high. We have a little bit of rejection. Then we come all the way back up, create another key pivot high, which is acting as resistance once again. And then we form our cup and handle. So we have higher lows being built just like our flat top break. Now what we're looking to capture in price is either the higher low for continuation for the breakout move, or now we're going to be looking for the breakout, or in this case, the retest for continuation higher. So there's a few different opportunities that we can be looking for. As I mentioned, we could be looking for the breakout for this trade higher, or we can be waiting for that retest on the higher time frames for a continued push here as well. So this fairly similar to the flat top break. The flat top break's a little bit more bullish, whereas the cup and handle a little bit less bullish, but still very key here on the higher time frames. And the reason why it's called the cup and handle is because we have what's called our cup, and then we have our handle, and this is where we should have that nice explosive move towards the upside. Now, what does this look like here on the charts? So as you can see here, we're back on Tesla here on the higher time frames, and what we have here on the daily chart, you can see we have multiple touches, and we're actually creating another flat top break here on the daily time frame. So we understand that if we're on the daily chart and we're forming what's called a flat top break, as you can see, once we do break out, we're most likely going to have a really big push towards the upside. What does the 1-hour chart look like? In this case, the 1-hour chart I consider is forming what's called a cup and handle. So now we're on the 1-hour time frame here. You can consider this a cup and handle. You can also call this a flat top break here as well. But basically, we're very bullish. Just based off of the daily chart, we have multiple touches at this key level of resistance. Logically speaking, if the daily chart's bullish and the 1-hour time frame is bullish as well, once we do get that break above, we can expect a really solid continued push towards the upside. So coming into this day, we're expecting bullish price action on Tesla. So if we can find some sort of lower time frame entry to capture this higher time frame thesis, we can potentially hold some more trailers for that higher time frame breakout if it does want to occur. As you can see here, coming to market open, what we have here is the 5-minute opening range. You can see price just kind of consolidates for the first 15 to 30 minutes. But once we do finally get that strong candle close above your 5-minute range high, that's when we went onto the 1-minute chart. And as you can see right here, price, we have a 5-minute range high, we have our 5-minute range low. Nice continued push towards the upside. You can see buyers start stepping in. Buyers start stepping in here. In this case, I'm waiting for extra confirmation. So I'm waiting for this candle to close. And then you can see it also actually comes back for the retest as well. And then we have a really strong push towards the upside. Right? As for our entries, we can enter in as soon as it shows some strong price action with a stop, a break below. Or if you wanted to wait for that confirmation candle, we can have our entry here, stop, a break below our 5-minute range. And we could be looking for a continuation back up and towards where, in this case, our target number 1 is going to be our previous day highs. So that's our first major target. But then of course, we're looking to capture that higher time frame breakout. So of course, we're going to leave trailers on this day in case the overall market wants to break out. And as you can see right here, right, we want to hold trailers to capture that higher time frame objective. So we're on the 15-minute time frame and we enter here. You can see we scale some up and towards our previous day highs. And then why do we leave trailers? We left trailers in this case for continuation towards the upside, because now you can see the 1-hour chart is fulfilling this cup and handle. And now we're having this nice continued breakout towards the upside. So you can see this right here is that big momentum move we're talking about, capturing that real breakout. You can see on the daily chart, similar thing. Higher lows are being built. We have a flat top break on the daily. now we can expect a strong candle close and continuation. And in this case, we actually had more continuation day 2, day 3, and we ended up having a really solid day on Tesla. In this case, the contracts, I think if I remember correctly, went over 1500% in a few days. And as you can see right here, these are my IBKR executions. You can see I entered in on that 5-minute range high, scaled some up in towards our previous day highs, but ultimately I was leaving trailers because I wanted to capture that higher time frame thesis. So a lot of people ask me, when do I hold trailers? When am I going to scale more of my position is really based off the higher time frames. If I have a higher time frame pattern that I'm looking for, I'm going to be holding my trade. If I have a lower time frame pattern with no higher time frame pattern, then I'm going to scale some more because I don't have as much conviction. So if I have a higher time frame pattern, higher time frame thesis, I have confidence and conviction that the trade will work out, plus have continuation. If I don't have that, then I'm either going to be on lighter size or I'm going to look to scale more aggressively. Next is a classic trend continuation. So we just talked about the flat top break, we talked about the cup and handle. What's another bullish setup that can form in the markets? It's just classic trend continuation. So all we're looking for is your previous level of resistance to turn into support and so forth. Previous resistance to turn into support for continuation high. And this is really just trend continuation, the break and retest, right? This is how trends work, right? Higher highs, higher lows, right? Higher highs, price comes back, retests our key level. We want to be looking for long positions towards upside, breaks above. Another thing, we want to be looking for longs as it retests, and we want to be looking for continuation. As I mentioned, the higher the time frame, the more power it has. So if you see 1 hour trend continuations or daily chart continuations, these are going to be very powerful. If you see this on the 1 minute time frame, it can easily fail and reverse. But if you have a daily time frame trend, it's going to be a lot harder to reverse because it's on the daily chart. So as you can see, we're on Palantir. We're here on the 1 hour time frame, and you can see price is ranging. We break above, now having that retest. Once again, price is coming back up. So what essentially we're looking for here on Palantir is a simple trend continuation for a push higher. We're going to be looking to capture this leg in price here on the higher time frames, or we'd be looking to capture this retest. Either or, right? We're essentially capturing what's called a higher time frame breakout, and we're going into lower time frames to look to capture this higher time frame breakout, as I mentioned. So we can trade higher time frame breakouts. We're not breakout traders, but we're capturing higher time frame breakouts. So that's something to think about. The reason being is because when the higher time frames are breaking out, that's when you have those big momentum moves. But we don't have to trade breakouts on the lower time frames, but that's not the optimal entry. We're just looking to capture that real breakout with a lot of momentum, and then we're going to go into lower time frames to look for the break and retest to capture that higher time frame thesis. As you can see within the first 5 minutes, we're having this really solid push towards upside, breaking above our pre-market highs, along with the key level here as well. So right off the bat here on Palantir, higher time frames bullish, 5-minute chart, fairly bullish. Now we're going to be looking for continuation towards upside. As I mentioned, there's a few different entries that we can be looking for. Number one perfect entry is going to be off our pre-market high plus key level. Based off the 1-minute chart, you can also mark out our 5-minute range here as well. In this case, there's not too much displacement, so most likely we'll be waiting for that pre-market high retest and the key level for that continuation higher. And as you can see, we get that break. We come back down for the retest now of what? Your pre-market high slash key level. What are we waiting for? We're waiting for the retest plus strong price action. So as you can see right here, we have a lot of buyers stepping in. See, price comes back down into that retest level. We have the buyers stepping in indicated by these lower wicks. Now what I waited for was what's called our confirmation candle. So if you watched my video a couple of weeks ago, I talked about that confirmation entry, which is when price closes above its previous candle. So as you can see, this candle right here closes above its previous candle, indicating that strong buyers are present. Once this is the case, we can look for an entry, stop a break below, and we could be looking to trade this back towards the upside. And as you can see right here, we have our entry point on this candle close, stop, fairly tight. It can be a break underneath here, which is market structure, or it can be a break below the candle that had that confirmation if you want a tighter stop. Now what we can be looking for is targets back up and towards high of day and above. And you can see on the 5-minute chart, perfect retest indicated by these lower wicks. 5-minute close strong here as well. Most likely going to have continuation back towards the upside. And as you can see, these are my broker executions, right? Got in on this candle close, scaled some up and towards high of day, and we end up riding this nicely back towards the upside. And that's exactly how to have higher probability lower time frame entries, is by capturing these higher time frame breakouts. And finally, what we have here is our head and shoulders fail slash invalidation. So if price pushes towards the upside, And you get what's called this head and shoulders pattern, where you have what's called your left shoulder, you have your head, and you have your right shoulder. This right here in an uptrend is very bullish if we can invalidate this right shoulder. Why? Because most people think this is a bearish pattern, which in the right context it is. But in an uptrend, this is one of the most bullish patterns, especially if we invalidate this right shoulder. So basically what most people are looking for is this right shoulder to continue back towards the downside and below. They're trying to anticipate this move lower. So if they're trying to anticipate this move lower, what happens if it doesn't move lower? It gets what's called invalidated. So as price breaks above, a lot of the times you're going to get a really strong breakout right back up and towards high day, which in this case will be the head, right? We're targeting that head because people that went short looking for that continuation lower, ultimately we're looking for their stops. In this case, it's going to be at the high. So price usually has a really big push higher once it invalidates this right shoulder, and we're going to be looking to capture, as I mentioned, essentially this reclaim. So basically what we're going to be doing is looking to capture this breakout back towards the upside, either that be the reclaim or the potential kind of retest for a move higher. And that's basically the logic and why the head and shoulders fail / invalidation is very bullish, as I mentioned, specifically in an uptrend. If price was bearish, then it would look a lot different. But if price is bullish, this is one of the most bullish patterns. So as you can see, this is a more recent example. This is AMD here on the higher time frames. And as you can see, this is bullish. Big push higher. We create our left shoulder. Now we create our right shoulder. As you can see right here, a lot of people think that if AMD rejects off this level and continues lower, it's going to be bearish, which in this case, you would be right. But what we're looking for and what we think is much higher probability, since as I mentioned, we have a clear uptrend in this case, is this invalidation of this right shoulder. If we can invalidate this right shoulder, there's a very good chance that AMD is going to have an explosive move towards the upside, because anyone that is thinking about shorting, their thesis is going to be invalidated, and you can expect a big push back up and towards, in this case, it's our all-time highs. So coming into market open, we're going to be looking for, as I mentioned, the break above, retest, and continuation straight towards the upside. As you can see right here, AMD, we're on the 5-minute time frame. Now we're breaking above a key level with a strong candle close. As you can see, this is our Tuesday's highs along with our previous day highs. So you can see right off the bat, kind of consolidation. But now you can see we have a strong candle close. You have that strong candle close. Now potentially you can be looking for a trade back towards the upside based off of that higher time frame thesis. Now what we're going to do is wait for retest entry for continuation or the 84% rule. Right off the bat, a little bit of a fake out, but once we're able to close back above, I opted in for the retest 84% rule, looking for continuation higher. As I mentioned, we're on the 1-minute time frame, so this is fairly bullish now, right? Higher lows are being built on the 1-minute chart, higher time frames bullish. Now the lower time frames are bullish, so we can expect a move higher above that Tuesday's highs, which in that case was your previous day highs on AMD. And what happened? As you can see, huge explosive move towards the upside right off that reclaim that we had. You can see AMD explosive move higher. Why was that the case? Because of the higher time frames that I talked about, right? We're on the 5-minute chart, perfect trade towards the upside. I'm going to show you guys a live session here in a second, but as you can see, we're on the 1-minute time frame and we're able to capture what's called this higher time frame breakout. And you can see that's when the momentum kicked in. And of course, these are my executions here as well. As you can see, we're on AMD. The 230 calls bought in around 280 average, scaled up along the ways. I'm going to show you guys my scaling thought process. And of course, I was able to hold trailers because of that higher time frame thesis that I had. I was able to trade this all the way back up and towards all-time highs. And this ended up being a beautiful trade on AMD. Now, with this being said, let's go on to the live session to see exactly how I executed this in real time.
Game plan for the overall indices. If you can maintain above your previous day highs, we can see this continue push towards the upside. If we break back underneath, then potentially we can see a reversal back down towards your previous day close, this gap fill along with this Monday's lows. So this is basically the exact same game plan here on almost every single major indice that we have, at least for the names that we're looking at coming into today, primarily the semiconductors themselves. I want to see if AMD can break above your previous day highs. As I mentioned, we have a couple key levels here in the pre-market for AMD. It's going to make it a little bit of a trickier open, but previous day high retest, we can see continuation higher, or if you can break above your previous all-time highs for continuation towards the upside.
So as you can see, coming to market open, fairly bullish on the indices along with the semiconductors on AMD. We're leaning more towards the upside coming to market open, looking for the break above your previous day highs for this continuation higher. I talked about the head and shoulders more in the pre-market prep, but coming to market open, essentially just looking to invalidate now this right shoulders here.
As for AMD, nice push towards the upside so far, kind of coming right towards our higher time frame key level, which is our 227. Now for AMD, let's keep an eye out on this general area, previous day highs, if you want to see hold. All right, let's keep an eye out on AMD here. If you can get this strong reclaim, I'd be interested in AMD above your previous day highs. 230 calls is in play here for potential reclaim setup on AMD. Look at the 230 calls here. If you get a strong reclaim.
So as you can see right here, I'm looking at AMD. So far, we're holding your previous day highs on the Qs. AMD, I'm still fairly bullish, as I mentioned, based off the higher time frame. So if you can get that reclaim, I'm interested in the 230 calls.
If you get a strong candle close, I'm going to be looking for the 230 calls on AMD. Yeah, AMD. I took some of the AMD here, the 230 calls on AMD.
So as you can see right there, I just mentioned I took some of the 230 calls AMD on this reclaim, right? Qs bouncing nicely off your previous day highs as well. AMD, one of my top watches coming to market open, for this nice continued pushback towards the upside.
We're going to have to see the Qs kind of defend this level. So far, it does look like it's potentially going to have a strong candle closure underneath. We'll see how this closes here on the 5-minute, but AMD previous day highs is going to be key here for us. You can see so far buyers are trying to step in here off this 225.
Yeah, you can see right here, as the Q is actually dropping here, AMD is holding up. So it's holding up above your previous day highs, indicating some relative strength here as well. So as I mentioned, higher time frame bullish, intraday bullish as well. We're expecting a nice move on AMD.
Yeah, Qs breaking underneath your previous day highs here. Let's see as it comes back up if it's going to ultimately fail or if you could potentially reclaim back above your previous day highs. As for AMD, this one's trying to defend this previous day high nicely, but we just need the overall market to push higher. If we can push higher here, I think AMD can have a nice pop above this 227. There's that pop right there with the Qs. Nice. I'm taking some off here. Nice pop. This is what we wanted to see. Right up and towards this 227 Qs here as well. If Qs can reclaim, AMD is going to be the leader back towards the upside. I think we can have a bigger move. If you can get above this 227 here, make sure to take some off. Very key level here, 227. If we can break above this, AMD has clear skies back up and towards 230.
So as I mentioned just right there, AMD, look to take a little bit off here on this 227. If Qs can reclaim back above your previous day highs, I mentioned AMD is going to be the leader, and we have room all the way back up and towards 230.
But we got a low risk entry here. Very low risk entry for us. Now scale some up into this previous all-time highs. Super solid area. Yeah, we're in a good spot here. Take some off. AMD up into this 228 Qs, reclaiming nicely here now as well. AMD, let's see. Yeah, we're in a good spot. Just make sure to scale along the ways. Non-stop so far after breaking back above your previous all-time highs.
As you can see right there, look at that move here on AMD. Nice push towards the upside here. Qs, nice reclaim. We're looking for that push back up towards high of day. AMD 230 hit, next level 234 and potentially higher.
Volume kick in, and look at that. After we broke back above that previous all-time highs, basically non-stop ever since. We haven't had a single down close candle. As I mentioned, scale along the ways. I actually scaled some more here at this 232, and then we're just gonna leave. So I'm just gonna leave remaining trailers now for potentially 234.
So yeah, as you can see right there, Qs, we hit our high of day as we wanted to with that reclaim. AMD hasn't had a single down close candle after getting back above your previous all-time highs, right? Taking some scales along the ways, but really leaving trailers now for that 234 and above. But yeah, as you can see right here, I sped up the tape on AMD. We're now at our 234. Qs end up having this nice push higher. I took majority of my position off, but then I left a few trailers overnight for continuation higher. But absolutely beautiful trade here on AMD. And understand those higher time frames, of course, is going to be the most important to capture those big moves in the market. So with that being said, I hope you guys did enjoy the video. If you did, I appreciate if you guys drop a like and sub. And I'll see you guys next week for a brand new video. Peace.